Welcome back to Explain the Charts. Today, July 23rd, 2025, we're taking an in-depth look at ETHUSD, the native cryptocurrency of the Ethereum blockchain, which continues to be a cornerstone of the decentralized economy. First, let's dive into the most recent news impacting Ethereum. A major headline highlights a surge in Ethereum validator exits, reaching a one-year high with over $1.92 billion worth of ETH currently awaiting withdrawal. This sounds alarming, but interestingly, this profit-taking is being largely absorbed by a parallel influx of new validators, with $1.3 billion ETH queued for entry. This indicates a robust underlying demand, suggesting market resilience despite large withdrawals. A key driver for this renewed institutional interest in staking is the U.S. SEC's recent clarification, which affirmed the regulatory compliance of staking activities, reducing friction for large players. This regulatory clarity is crucial for mainstream institutional adoption, with major firms like Visa, PayPal, and JP Morgan already integrating Ethereum-based solutions. Furthermore, the explosion in decentralized finance activity, underpinning billions in total value locked on Ethereum, continues to drive demand for ETH. Combined with the EIP 1559 burn mechanism, this solidifies ETH's position as a deflationary asset, contributing to upward price pressure in the long term. While news reports show Ethereum recently hit a fresh 2025 peak of $3,848, then pulled back slightly to trade near $3,786. Its overall trend amidst these developments is what we need to examine closely on the charts. Now, let's transition to the charts and see how these narratives play out in the price action. Looking at the daily chart, we can observe significant price swings over the past year. After a peak near $4,096 in December 2024, Ethereum experienced a notable downturn through early 2025. If we narrow our focus to a critical period from early February to mid-April 2025, we can see a severe price correction. Specifically, on February 3rd, the price saw a sharp decline from around $2,885 down to $2,100. Another dramatic drop occurred on April 6th and 7th, pushing ETHUSD down to a low of approximately $1,410. This $1,410 level acted as a strong demand zone, showcasing a significant reversal with a 13.4% gain on April 9th, demonstrating strong buying interest at these lower price points. The substantial volume during these major drops and subsequent reversals indicates a battle between sellers liquidating positions and strong buyers stepping in to accumulate. Expanding back to the full daily chart, following that decisive bounce in April 2025, Ethereum has established a clear upward trend. We've seen a consistent series of higher lows and higher highs, indicating a healthy bullish structure. The price has successfully reclaimed several key resistance levels that previously acted as ceilings. Currently, ETHUSD is trading near its recent 2025 peak around $3,860. The area between $3,800 and $4,100 represents a crucial resistance zone, derived from previous highs, which the price is now testing again. Sustained closes above this level would signal a continuation of the bullish momentum and could lead to new all-time highs. Let's zoom into the 1-hour chart to get a clearer picture of recent short-term price action. In the past few days, ETHUSD has been consolidating around the $3,750 to $3,800 range after its push towards the 2025 peak. We can see that volumes have been moderate during this consolidation, which is typical after a significant rally, indicating neither strong selling pressure nor overwhelming buying pressure right now. The immediate support on this time frame appears to be around the $3,700 level. A break below this could signal further short-term retracement. Conversely, reclaiming and holding above the recent local high around $3,860 would indicate a fresh surge in bullish sentiment. This hourly chart also highlights the rapid movements that can occur, for instance, strong upward impulses followed by profit-taking corrections within hours. Traders should monitor these smaller timeframes for quick entry and exit opportunities, always keeping an eye on the broader daily trend. The news about Consensus cutting its workforce, while a general industry trend, is not showing a direct negative impact on Ethereum's immediate price action, suggesting the market is prioritizing fundamental drivers. Moving to the 15-minute chart, we gain an even more granular view of current price movements, crucial for short-term and day traders. Here, we see the immediate price fluctuations around the $3,750 mark. Within the last few hours, ETHUSD has shown some minor volatility, typical of intraday trading. The candles show periods of slight upward momentum, followed by quick pullbacks and vice versa. Observe the volume on these smaller candles. Higher volume on significant moves, whether up or down, can indicate conviction. The key short-term levels to watch are around $3,740 as immediate support and $3,780 as immediate resistance. A breakout above $3,780 could quickly lead to a retest of the $3,800 to $3,860 zone. Conversely, a break below $3,740 might see ETH fall towards $3,700 or even deeper towards the daily support. For short-term trades, looking for bounces off these micro-supports or rejections from micro-resistances, coupled with volume confirmations, can offer tactical entry or exit points. To recap our analysis, Ethereum is currently in a generally bullish long-term trend, underpinned by strong fundamentals and positive regulatory clarity from the SEC regarding staking. Key long-term support lies around the $2,800 to $3,000 area, with critical historical support demonstrated at the $1,410 level, where it strongly rebounded in April 2025. Immediate support for short-term traders is around $3,700, while strong resistance is at the $3,800 to $4,100 zone. Reasons to be bullish include expanding institutional adoption, the continued growth of DeFi, the deflationary supply mechanism, and the recent SEC clarity affirming staking compliance. On the bearish side, profit-taking at higher price levels, as evidenced by Validator exits and general crypto market volatility, remain constant risks. In the short term, we predict a high likelihood, approximately 70 to 80%, that ETHUSD will retest the $3,800 to $3,860 resistance in the coming days, especially if overall market sentiment remains positive and institutional inflows continue. A sustained break above $3,860 with significant volume would reinforce this bullish outlook, making a push towards $4,000 very probable. For the midterm, breaking and holding above $4,100 could pave the way for a move towards the $5,000 price target that some analysts are eyeing. We assign this a plausible 50 to 60% likelihood, conditional on strong momentum and absence of major negative news. Conversely, if ETH fails to break resistance and drops below $3,700, a retest of the $3,400 to $3,500 zone would become likely, with a 60% probability. What to look for? Monitor ongoing institutional announcements, daily DeFi total value locked, TVL, metrics, and changes in the ETH staking queue dynamics. Also, watch for any unexpected regulatory shifts or macroeconomic events that could rapidly alter market direction. Always remember, past performance is not indicative of future results, and conducting your own research is paramount in this volatile market. Thank you for joining us on Explain the Charts for this in-depth analysis of ETHUSD. Don't forget to like, share, and subscribe for more insights into the crypto markets.